Welcome to TradeTheNBI.com. This is John. This report is for the 10th, and while the excitement, the explosion, whatever you want to call it, continues, look at this ATR down here, 62. So that's the daily range, and boy, it was an exciting one the other day. It is massive ride up to go right back down again, but as long as we stayed over that 26.16, the bias was bullish, and well, you can see in pre-market, huge activity. Again, we still just have rising red here. It's finally started to trail off from the other day. No reset of the steel. It's just, we're sort of range bound. You know, again, we have our thresholds, like I said, above the 23%. We like to be bullish with that. You're going to hit resistance up here at the orange line, which we did the last several times, which puts us right in the range right around 67.50. And of course, then above there, the target would be higher, and then we would be able to flip and say below, you would take your gains at the 38 if you're playing the longer term. Shorter term, there's a lot more options with that. So likewise, view, except for a little bit stronger from the NQ, simply because it's above the 23% line from the beginning, and closed above the 38% line. So clean and simple. Euro rising, that certainly helps bolster the market. A little bit of flight to quality here with the bonds, simply because of that volatility, causes people to get all squeamish. Don't know why. Oil, just right back to that ABM green. You know, again, it's one of those pivot things, but should be actually starting to do some improvement right there. It's always going to be these little back and forths, but a lot of this stuff's caught in a range bound simply because they're waiting for a definition of the inflation environment to see if it's real for the first time in a decade or still way off. Now, this is our intraday chart. Look at all these lines. Crazy time. So we started with this nice little pre-market rally. It faded just a little bit and then put in a nice little buy signal. It was right about there. And then shortly after that, we were cyan under red, which we all know. But then it gets into this situation where I love to talk about. I marked this little cyan line right here. It happens to be the start of positive extreme histograms. So I love to put those in there because we know that's the start of algorithm activity. And once algorithm activity is done, they like to retrace back to those levels. But when I put these green ones in were the rolls of the shakeout where we already have decent buy setups and then the beginning start of a new shakeout increase. So you would have it again here, took place again here, here, and then it wasn't until the final one right here that you didn't actually make money. It finally flipped to it, but it just represents areas where you can continue to either make additions. It's not to say that you're not going to catch some heat, particularly if it's oversold, but when you still have cyan under red, you're still in a bullish mode. It's just worth noting. What was interesting about this one particularly was right about here on the red, we had the rising gold above the 50%, which does what? Calls us to expect highs to be reached. And that's exactly what happened. And not only did we get highs, it just kept going and going and going and going until it stopped going. And then once it stopped going, which was a beautiful DOC spread right here, algo super move on the orange there. And lo and behold, it just started to decay, flattened out just for a moment, and then continued that decay all the way back. Well, and I was looking for this 2730, which was the retrace of the algo, and sometimes you just get carried through, and that's exactly what happened at the end there. You just had some additional capitulation going through. We could probably go back to the algos that we had all the way over here, which began at the base point of it right there. So that goes back a couple of days for these earlier ones, and that's how it works. Those become these significant resistance points. Now then we look at the post-market, and we ended up with a couple of situations that actually the first buy really developed right about here, but it was under really stupendously ugly shakeout, and everything was still decaying and falling at that point, and then it started to move where you had gold above magenta and that right about this one, which happened to close almost at the lows, so risk reward wise it was fairly clean. Traded across for a couple of bars, and then miraculously the trade war with China ended and all there is peace among the land. So the whole build up to being tough, and then a deal gets worked out. Maybe people are going to start to realize that and get a little bit of a backbone. Who knows? Don't count on it. That's just not the way people are, because they're skittish about everything, so that's fine. Needless to say, same situation. Rising gold right about this particular point on the shakeout right here, and sure enough, pushed right to the highs, and we're still accelerating in that. And a lot of times you get these on a double wave, like this one happened here, plateaued a little bit, and then started again and pushed to new highs. And of course, staying above that 15 for a long time for the magenta, and that really didn't give any opportunities to do much of a short per se. It was just a tiny little move, didn't even reach the 76% Fibonacci right there. But once the real signal hit, when everything started to make higher highs on lower shakeout, and then a beautiful DOC spread, darn well better jump on that, because those usually produce significant moves, and that's exactly what it did. So all in all, it's not a bad market. It's very tradable. I think the moves have been pretty clean in general, very consistent, so I don't think that it's anything to be terrified of. If you need to, turn off your news if it bothers you, but all in all, I think you just go with the signals, and again, from a daily standpoint, it becomes very easy across those pivot lines, and to not explore them, I think it's just crazy, because it's very consistent, and you can see how right as we got over the 26.1650, right here, is where the support took place, and the explosion happened right off of it, and the previous day is exactly where it took off as well. So, food for thought. As always, though, I will keep putting up charts as they're relevant, but trade well. We'll talk to you later.